Hello guys, welcome to today's video. This is your girl Nesmomo. So after my video on the payslip system in Ireland, I had a lot of comments that were actually suggesting that I do a video on the tax deductions in Ireland. One message that actually got my attention was from Peace. So Peace says that very informative. Can you do a video on how tax deductions are made, like percentage wise? So I actually thought of using the tax credit certificates in Ireland to explain how the tax deductions are actually made. So if you're a taxpayer in Ireland, you receive what is called the tax credit certificate, which actually explains to you at what percentage your income is taxed at 20% and at what percentage your income is actually charged at 40%. So let's go into today's video and try to have a better understanding about the tax system in Ireland. So this is how a tax credit certificate actually looks like. It gives you more information about tax, statements of liability, about some tax credits that you can actually claim, and also some relief, okay, that you can also actually claim. So that's how it looks like. So I just scroll downwards just for you to have a quick view. You can all see that it says that tax credits and universal credit charge certificate. So this is for the year 2024. So this is actually what I actually received from the Revenue Office for the year 2024. I now have an amended one because I've been able to prove that I'm married. So I actually received a different one, which is very favorable. I'll say it's for the married couples. As you can see, if you're a single person, okay, you have a personal tax credit. So the tax credit actually reduces the amount of tax that you pay as an employee. You get a personal tax credit and also an employee tax credit. Okay, so you can see a personal tax credit which is at 1,875 euros, and then we have employee tax credit which is also at 1,875. So the gross tax credit is 3,750. Okay, so let me scroll downwards. You can see tax rate band. Okay, so what the tax rate band means is that it actually shows you an amount that is actually charged at 20%, which is your salary, and then what is actually charged at 40%. So we can see that they say that the amount of your income taxable at 20% is 42,000 euros per year. It's actually per year. Okay, so I think every year this is actually being reviewed. For the year 2023, I think it was at 40,000, and this year 2022 it's actually being increased to 42,000. So if you earn up to 42,000 euros per year, you will be charged 20% on that amount. Okay, and then let's go down. All income above 42,000 euros is taxable at 40%. Okay, so any income above this stated tax rate band is going to be charged at 40%. Okay, so there is further explanation down here. So let's try and see. So you're actually going to have your employer name here. Yes, I have to cover the name of my employer. I'm going to have the employer name here, and then you have your tax credits explained to you. So you can see that if you're a single person, your yearly tax credit is 3,750, which are already established at the initial stage. Okay, and then monthly for this is 312.50. Okay, so if you are being paid monthly by your employer, you are going to see your tax credit as 312.50. In an instance where you've worked for the month and let's say you are supposed to pay a tax of 1,000 euros, it is going to be reduced by 312.50 euros for that month. Okay, and then for weekly, in case you are being paid weekly, it's going to be reduced by 72.12 euros. That's how the tax credit actually works. Okay, and then we have the tax rate band. It's saying that the tax rate band at 20% yearly is 42,000 euros, and then monthly it's supposed to be 3,500 euros. So if you are earning monthly and then you earn more than 3,500 euros, just 3,500 euros is going to be charged at 20%, and then any amount above 3,500 euros is going to be charged at 40%. Okay, and then weekly it is 807. Okay, so if let's look at the fortnightly, definitely is going to be 1,750. Okay, so 1,750 is going to be fortnightly. So if you earn more than the stated amount, then you are going to, the rest is going to be charged at 40%. I hope this also helps. And then we have, let's go down and also look at the universal social charge, which is also social charge in Ireland. Okay, so it's with the universal social charge, it's always the same. It says that income chargeable at 0.5 is just 12,012, okay? And then it's also stating the monthly and then the weekly. And then income chargeable at 2%, it is from 13,748. So they're first going to charge 0.5 on this income, which is the 12,000 and over. And then the next one, which is the 22%, is going to be charged on 13,748. And then the rest, which is going to be charged at 4%, is going to be charged on 44,284, okay, which is also yearly. And it says that all income over 70,000, all income over 70,044 in your employment is going to be charged at 8%. So now let's look at the tax credit certificate for someone who is married. So this is actually for a single person. Okay guys, so in this year 2024, I was able to prove that yes, I'm married and all of that. So I received an amended tax credit certificate. So I'm also going to use that to explain, so we can also differentiate from the married person and then as a single person working in Ireland. Okay, so you can see that for a married woman or a married person, personal tax credit is 3,750. If we quite remember, I'm going to show it on the screen. For a single person, the personal tax credit was 1,875. Okay, and then for a married person, your personal tax credit has been increased to 3,750. Yes, so which shows that they are going to pay less tax than someone who is single or is not married. Okay, so you receive a personal tax credit of 3,750, and then employee tax credit is 1,875, which is just like a single person. Okay, so your gross tax credit is going to be 5,625. That is going to be for your gross, which is more compared to someone who is single. Okay, so now let's look at what happens. It states down here that 2,000 is charged at 20% and whatever is charged at 40%. But let's go further for you to have a better understanding. So when you are married, okay, you have to prove that you are married. You have to fill what is called the spouse accessible forms, which shows that your spouse is in the country, because you have to enter your spouse PPS number. Then you also have to tell the revenue office how you want your tax to be deducted. So you have to elect one person, like your spouse. You have to, either you or your spouse should be the accessible spouse, okay, who is going to receive most of the tax credits, or you are actually going to tell the revenue office how you want your tax credit to be split. Okay, so if you are married, you and your spouse actually have 84,000 euros per annum. Okay, so anything above this is going to be charged at 40%. So the one who actually earns most is going to have 51,000 per year charged at 20%, and anything above that is going to be charged at 40%. So we all know that if you are single, you have 42,000 euros per year. But if you are married, you get 51,000 charged at 20% per year, and then your spouse gets 33,000 euros charged at 20%. So you and your spouse together is a total of 84,000 euros for the year 2024, and definitely this is also going to be reviewed. So this is my tax credit certificate, my amended. Okay, so now my yearly tax credit, it is now 5,625, and then my monthly tax credit is 468.75. I'm assuming I make a total income of 5,000. My monthly tax credit, my tax is actually going to be reduced by an amount of 468.75. Okay, and then weekly is 108.18. And then let's look at the tax rate band. So it says that my yearly tax rate band says that 20% is charged on my income up to 51,000. So anything above 51,000 per year is going to be charged at 40%. And then monthly, my monthly income is 4,250. Then this will be charged at 20%. Okay, so anything above 4,250 is going to be charged at 40%. And then my weekly income, if it is weekly income, it should be at least 980.77. Anything above this should be charged at 40%. Okay. And then when we look at the universal social charge, it's actually the same thing. It's the same deduction like that of a single person. So now let's look at the percentage for someone who is a single person, who is divorced, and all of that. So at least you also have a fair idea about that as well. So as you can all see on your screen, I have the tax rate bands. And then you can see that you can see the difference when it comes to 2022, 2023, and 2024. I'll just mention one just to give you guys a fair idea. So in the year 2022, all income above 36,800 for single people are charged at 40%. And then it came in 2023, and then it was actually increased to 40,000. And then in this year 2024, it has also been increased to 42,000. So you can see that for a single person, income up to 42,000 is charged at 20%, and then anything or the balance after that is charged at 40%. And then just as I explained, for a single person or a single widowed or surviving civil partner qualifying for single person or child carer credit, it said that you have 46,000 charged at 20%, and then the balance is charged at 40%. And then if you are married, just as I just used my tax credit certificate to just explain, it states that you have 51,000 charged at 20%, and then the balance charged at 40%. And it further explains that married or in a civil partnership, both spouses or civil partners with income. The first one I just read was one spouse or civil partner with income, if it's just one. So if both of you are actually working, okay, you have 51,000 euros at 20%, okay, with an increase of 33,000 euros maximum, then the balance will be what? 40%. I'll just use myself an example. I'm actually now anything above 51,000 euros is being charged at 40%, and then my husband, anything above 33,000 euros is going to be charged at 40%. So both of us together is 84,000 euros, which is very good. And I'll say that if you are married in Ireland, you get that kind of benefit, and it really helps a lot when it comes to your tax system. Okay, as well as let's say if you are still married and you are the only one working, or you are single or widowed or surviving a civil partner qualifying for a single person child carer benefit. Okay, so these are the tax rate bands for the year 2024. So just to add up that apart from the employee tax credits and also the personal tax credits, there are various tax credits that also helps reduce your tax system in Ireland. I'd urge you all to try and read more about it. If you think you qualify for any tax credits, that will also help to reduce your tax. Why not? Try your best to also apply for it. And also the tax credits also is very important when you're also filing for your tax returns in Ireland, which is going to be a different video for another day because it's a very interesting topic. Yes. So if you think this video has actually been very helpful, why not just support your girl by hitting the like button, also sharing this video, and also drop a comment to support your girl. For all my returning subscribers, thank you guys so much for always supporting your girl, for encouraging me, and all the topics you guys are giving me to cover. Oh guys, I appreciate it. Thank you guys so much. See you all soon on my next video. Bye.